It's noon on the East Coast, December 10th. This video is going to be an update on AMC. We haven't done one in a long time because, quite frankly, the stock just hasn't warranted an update. For weeks, if not months, we talked about how this stock was destined to pin the 40 strike. And the reason that we called for this 40 pin, as you can see, the stock just revolved around this price, was due to really large options positions at the 40 strike that expired in January of 22. Now, what's obviously happened is that meme mania is deflating. A lot of these stocks are getting sold off. And you can see AMC in particular here is just, it's just getting walloped. And in addition to whatever type of macro flows are going on around interest rate changes and the like, there's a big shift in the options position of AMC. And the options position in AMC is a large one. And I think it's meaningful. And I think we've proven that it's been meaningful in determining the direction and volatility of AMC. So here we've gone to our equity hub. This is part of the SpotGamma subscription. If you go to subscribe now, you can try this out for 7 days, absolutely free. What we're going to do is we're going to scroll down here to start. And this is the 5-day history of AMC. These are our key options levels, as you can see. Now, the hedge wall is an important metric because as that declines, that is telling us that the key hedging inflection point is moving lower in AMC. So you can see here, it started off 5 days ago at 40. It has now shifted down to 30. The key gamma strike, which is the level at which most of the gamma is contained, is now 30. Keep in mind, as we just said, it used to be 40 and it was 40 for quite a while. The other thing that we wanted to note here, though, is this. See this delta number? This is telling us that the deltas or in the money options in AMC have dropped sharply. Call open interest is increasing. It's gone up 100,000 this last week. Call open interest is also increasing. Curious, right? Well, we have another tool, and we call that tool Hero. And it's in beta, and we can't show you the dashboard for that, but we're going to show you a chart. Now, what this chart shows us is the real-time options flow. Now, for the past several days, the flow has looked exactly like what you see in our chart. The black line is the stock price. The orange line is the call deltas traded in real time, and the blue line is the put deltas traded in real time. So what we can tell you is that the deltas are negative, which means that put options are being bought, right? Because that means that there's negative deltas tied to that, and then call options are being sold. Quite interesting. So if you go back to this other chart and you say, well, the call interest is increasing, that's good. So there might be some call buyers in here, but our flow is telling us that calls are being sold, and that is why open interest is increasing. Furthermore, the put open interest is clearly growing, and our negative deltas tell us that those are put buyers. So this options complex in AMC is shifting lower. And we think that there's also these long deltas are likely also in the money options. And what that essentially means is there's people who have owned calls in AMC for a long time that are, maybe they bought them when the stock was at 15 or 10, and those are quite in the money. And again, note this top delta expiration, 121. There's still big in the money call positions that are going to expire in January, which is a little more than a month away, right? But those calls are really losing a lot of value right now. And so we think that a lot of the calls we're seeing trading are in the money calls being sold, and that is why this delta is dropping so sharply, right? Because when the stock was significantly higher, you can see the stock's at 31 and 32, you can see these deltas are much higher, and then as the stock declines, the deltas drop. That's telling us that the calls are losing value. If these were puts that were in the money, then this delta would be increasing as the stock goes down, but that's not what's happening. So I want to show you this quick Excel chart we put together. This Excel chart shows us what the delta notional is for each expiration. So if there's a lot of calls that are in the money, the delta will be very high. If there's a lot of puts that are in the money, the delta would be very low or very negative. So you can see two interesting things. One, there's a big put delta expiration. It's only about, if you net these out, 150 million negative tied to the 12/17 expiration. So there's a lot of puts that are set to expire, which can be a bullish signal for a stock. If a lot of puts are removed, then maybe dealers have to buy back some stock. But what we really want to focus in on this January expiration, $350 million of delta net. That's $460 million of call in the money calls are tied to that expiration. And basically market makers have a directional hedge on tied to these calls, right? Because there's this big long exposure, right, tied to this January expiration, and that's getting unwound. And then obviously as we enter into the January expiration, depending on what the price of the stock is at the time, this is going to be a major time or event, right, a big trigger for AMC stock. And again, how that plays out will depend on what the price of is of the stock as we approach that January expiration. So if you own AMC or you care about AMC, you want to watch this January expiration due to these in-the-money deltas. But again, with the fact that the stock is just directionally getting pounded like this, the options position that had kept it stable for so long, it seems like that position is getting unwound now via those long calls, and that is unleashing sort of this major pressure and shift lower in the stock. So for the moment, we see 30 as the key level. You can see here, we think that is a resistance line. One other thing we wanted to catch is if you check out our previous version of the Equity Hub, this is version 1.0, which I actually like and a lot of people like because it shows you what the gamma curves are in a name like AMC. So we'll just pop this name in here. So there's two curves you're going to see here. The blue line is the call gamma. So if you just look at calls, what does the gamma profile look there? And then you can see in the orange is the put gamma. So what we want to note here is that the fact that, yes, we have a lot of in-the-money options, but there are a huge number of puts that start or struck from 40 down to 30. And we can tell that these puts are contained in these strike areas because you'll notice that the gamma accelerates. The fact that this line is vertical, the more vertical of a line you see here, the more gamma there is. And that means that there's more hedging flows that are tied in here. So there's an accelerant, so to speak, from about 30 all the way down to about 23. And you can see that the gamma profile flattens out, right? So this means that there's a lot of hedging tied to both puts and calls because you can see how vertical this line is. And then you can see the calls under 30, those calls start to lose a lot of gamma, but the put gamma is still there. And then under 25, the gamma flattens out, which means that the hedging pressure should flatten out. So if the stock does happen to get under 25, that's the core of what we're trying to say here, that the gamma might lead to a drop in volatility. The movement of AMC may settle down. So we hope this video is helpful. If you have any questions, please send them to info@spotgamma.com or hit us up at SpotGamma on Twitter. Thanks.